From Daily Forex, this is Chris taking a look at the euro against the US dollar. The euro did initially try to rally on Thursday, but gave back gains rather quickly above the 1.13 level. The 1.12 level underneath there, for me, is rather important, and I think you need to look at it through that prism. If we were to break down below the 1.12 level, then we re-enter the consolidation area that we had been in for a couple of years. We had recently broken out of that fairly well-defined consolidation area between 1.05 and 1.12 a couple of months ago, and we broke below it, and now we shot straight up above it and find ourselves possibly rolling over to go right back into it. So is this really a longer-term range-bound market? It's starting to look like it. And if that's the case, you almost treat the chart, the price chart that is, like the stochastic oscillator or maybe the commodity channel index, something to that effect where you have an overbought and oversold condition. We're in the overbought condition. The yields in America continue to climb, and quite frankly, if the euro starts to slip from here, you'll probably see that be a dollar-centric move because we are starting to see the same thing in multiple other currencies. The Canadian dollar, the New Zealand dollar, the British pound, the Japanese yen, and a whole host of others are starting to struggle against the greenback short term. The US dollar, of course, had been oversold, so I do think at the very least a correction is probably a reasonable expectation. But I would not really look at this through the prism of anything more than a market that is overbought at the moment. If we break down below the 50-day EMA, then I probably get a little bit more aggressive to the short side. As far as buying is concerned, I need a daily close significantly above the 1.15 level to do so, and that could kick off a nice leg higher.